Hi everyone, welcome to this edition of Commodities Dialogue. I am Dr. Shunmugam here, a consultant from National Institute of Securities Markets. So in this edition of Commodities Dialogue, we are going to talk about agriculture commodities, its production, supply, distribution. To talk about the same, so we have here with us Mr. Chandrashekhar, who's an expert in commodities market and in agribusiness management and policy advocacy and what else and what not actually. Mr. Chandrasekhar is a renowned policy analyst as well, and his opinion is pretty much valued among the policymakers. So, thank you, Mr. Chandrasekhar, for being with us and giving us time to walk us through the agriculture commodity situation. So, the pandemic, in the time being, had taught us many lessons. And, one of the lessons is that you have to have your supply chain as accessible, as small as possible, so that people have access to commodities at every point in time whenever they need it, be it pandemic or a non-pandemic or a not normal situation. So where do you see the global food supply, production and distribution situation in this coming year, given that we are looking at something like pandemic getting away and we are going back to normalcy and things like that?
True. First of all, let me thank you, Dr. Shunmugam, for inviting me. It's such a delight for me to be part of this NISM event. It's a new initiative, and I'm sure it's going to succeed. There's no doubt at all. Without doubt, the pandemic from early 2020 has disrupted the global value chains, and a lot of countries, a lot of people have actually suffered because of the disruption to the global value chain. But now, over the last 18 months or so, the world has suffered the adverse consequences of the pandemic. But now a new enthusiasm is coming into the market, primarily because of large-scale vaccination across the world. And then economies are getting back on track, and therefore there is a new confidence. And we are able to see that confidence in the marketplace. If you ask me about global grains production, for example, food production in general, in 21-22 as compared with 2021, I can see very clearly that the global food grain production in 2021-22 is going to be substantially unchanged from the previous year. And I'm saying this, and we know in this such a gloomy situation of the last 18 months, agriculture has been a beacon of hope, not only for India, for the whole world. And agriculture has performed reasonably well. And therefore, that trend is going to continue. In 21-22, both wheat production and rice production, which are two major grains for the world, production is going to remain unchanged, but I expect consumption to pick up, and then therefore there could be a small impact on the ending stock. This is a very, very positive situation as far as the world is concerned, because production has not taken a hit. That is what is important. We had demand destruction last year, but that phase is over, and therefore demand is coming back to the market. But if we were to add maize or corn to the grains basket, then I think we're probably going to be producing at least 70 to 80 million tons more maize in 21-22 as compared with the previous year, and therefore that is also going to cushion the impact in the marketplace. Therefore, I think overall I see good availability of cereals in the marketplace in 21-22. And I would, of course, expect that prices will certainly remain firm, but we are getting out of the situation of lower demand or demand destruction. That is, for me, a very positive sign.
What are the key factors that the market participants should look at in terms of the production, supply, and the price situation going forward?
Yes, I think that's an interesting question. I In all my presentations in recent years, I always talk about six major drivers of the global agriculture commodity markets, which no trader, no investor can ignore. The first one is economic growth. The second one is geopolitics, and which would obviously affect crude oil prices primarily. And crude oil is a universal intermediate, very critical for agriculture cost of production. The third factor is monetary policy. The fourth factor is currency, particularly the dollar. The fifth factor is weather. And the sixth factor is funds, role of funds. Therefore, there are five factors primarily: economic growth, geopolitics, monetary policy, currency, and weather. The funds actually look at these five factors and then take the trading position. But the role of funds cannot be discounted, because funds are in a position to create huge volatility in the marketplace. Therefore, we need to track these five major drivers or factors. But very specifically, I must mention that for 2021-22, I expect the threat of a repeat of La Nina. We had La Nina in South America in the last quarter of 2020, which impacted production of soybean, of corn, of wheat, of cotton, cocoa, cashew, you name it. South America seriously suffered. We also had the effects in the Black Sea region of La Nina last year, where obviously the sunflower seed production and oil production declined. The US also faced, parts of US faced dry weather conditions. Now there is a risk of a repeat of La Nina in the last quarter of 2021, that is this year, October, November, December. And therefore, that is a risk we need to take on board. The second one is elevated prices of crude oil. Crude oil is currently, Brent, I think, touched $80 a barrel yesterday. And in fact, 3 months ago, in an event for the IMC, I had said that in the third quarter, crude oil will be between $70 and $75, but now it's even exceeded that expectation. Importantly, also, the ultra accommodative monetary policy will continue to exert its impact. Very low interest rates, too much of liquidity through various central bankers, particularly the United States Federal Reserves, etc. And more important is the demand side. There's a renewed confidence in the market because of large-scale vaccination. Therefore, we need to track these. China, as always, in every commodity, particularly in agriculture, is the mover and shaker of the market. Therefore, we need to, of course, track China's production and import policy, their policy to create reserves, etc., and the dollar. I'm quite bullish on the dollar, which can potentially cap the upside for prices. Yeah.
Thank you, Mr. Chandrasekhar. So it was a wonderful insight into the global production, supply, and distribution situation. And the pandemic had brought about a lot of changes in our lifestyle, including in the financial markets and things like that. And one of the changes that is pretty much visible is that that our offices have been replaced by our living rooms, and and we had, like, instead of the restaurants, we had restaurant-like foods at our home and things like that. And in the financial market, there are certain financial indicators that came into the limelight, and one of them was FAO food price index. And that food price index, that I had been noticing it, and and in the last month alone, compared with an year-on-year situation, it had increased by 33%. So where do you see the global prices are heading towards? Is it because of the production, supply, distribution side? Because as you had explained, we are surplus in terms of, except for some deficiencies which may happen in some of the crops and things like that, actually. And what are the factors that we should look out for in terms of the food prices to be tamed down? Sure. And things like that? And another thing that there is a cost push factor. So as you rightly mentioned, the Fed Reserve's easy monetary policy is also having an impact on the cost push factor, including the crude oil prices, including the renting costs of lands and things like that, actually. So will the supply be able to outweigh these demand and the cost push factors? in terms of stabilizing the food prices in the year forward?
I understand. First of all, Shunmugam, I must mention, I think it may be a little unfair to compare what happened in 2020 and then project and look at what is happening today and what is likely to happen in 2022. 2020 was a very, very unusual year. After all, COVID-19 pandemic, national lockdowns, supply chain disruptions, etc., all that, and then a massive demand destruction. That was a combination of circumstances, both on the supply side and on the demand side. And now this year, with life coming back to normal, rapidly normalizing, that is what is pushing prices higher. That is very clear. Therefore, while there is no dearth of supplies this year, although there was a dearth of supply last year because of La Nina, there is no dearth of supply this year, but a resurgence in demand is what is pushing global food prices higher. And one key factor is a major disruption to the global supply chain, primarily because of a very, very tight, extremely tight availability of containers. And container rates, freight rates have gone up from something like $500 a container to $2,500 a container. And 5 times, freight costs have gone up multiple times. And therefore, in a situation where supplies are normalizing, demand is returning to the market in a fairly modest way, but at the same time, the cost of production of agriculture commodities continues to remain high because of fairly elevated levels of crude oil prices, and then we have the risk of a repeat of La Nina. All these are factors that we need to track, and therefore, in case of agri commodities, it is extremely important that we keep tracking prices, and that the market participants need to actually hedge their price risk, because markets are going to be rather volatile in 22 also. And there may be a short period of a downward price pressure, particularly in the northern hemisphere, because we are now into the harvest season. Whether it is the United States or Europe or India, China, Asia, whatever, the northern hemisphere, there will be some a downward price pressure, but that should not lull us into any kind of complacency. My belief is that high crude oil prices, too much liquidity at very cheap rates, and all this is not going to support a price correction in Q4 2021 or Q1 2022. Rather, these factors are going to keep prices at a fairly elevated levels. And then look at the United States and other parts of the world. Big push towards biofuels, whether it is ethanol or biodiesel. The Biden administration is very much in favor of biofuels, and therefore all that is something we need to track. We need to factor. On many of this, we have no control. We have no control over La Nina, for example. And I don't think anybody has any control over container availability around the world. So these are very, very tricky, intractable factors and risks which we need to bear in mind.
Thank you, sir. So this is, as you rightly mentioned, La Nina is a key factor to watch out for, and that is not in our control. And it's actually a factor of what I would say climate change, actually. So what we have been believing is that climate change is impacting only on the supply side, that it's affecting the crop production, and hence, the supply is going to be impacted going forward. So what's coming up in the last 1 or 2 years is that the climate change is going to impact on the demand side as well. In the sense, the food commodities are getting converted into renewable fuels and things like that. Actually, will this be a key factor to watch out for? Because I always believe that climate change is something that nations should look at when the economies are in a progressive side, actually, right, not when they are on a regressive side, actually. But unfortunately, we are realizing this when the economy is facing situations which is regressing us towards the the slowdown in the growth and things like that. So will this be a key factor to watch out for in the next?
Absolutely, absolutely. You said it. A lot of people still think climate change is a myth. No, it's an absolute reality which we need to recognize and act against, and then act to de-risk businesses. And we are seeing, after all, in the last few years in our country, in different parts of the world, we have seen evidence of climate change and global warming, weather aberrations across the world. Early onset of monsoon, late onset of monsoon, early withdrawal, late withdrawal, pockets of flood, pockets of drought, and then a cyclone and whatever else. I think we have seen all this very rather unusual phenomena of the recent decades. If you look at these kind of weather patterns in the last say 20, 30 years, if you were to track, I'm seeing in the last 10 years it's happening a lot more frequently than it happened in the previous 20, 30 or 40 years. But climate change, some people don't seem to believe, because it's a very slow, very slow process, very gradual process. I call it an imperceptible process. You will not be able to perceive it, you will not be able to see. And therefore it's a very slowly, imperceptibly, it is going to eat into the vitals of the global agriculture system. It's like cancer, for example, because it grows steadily, but it grows inexorably. And therefore it is extremely important that in the global agriculture production system, we need to factor in climate change. Take in fact India itself, if I may mention, we are a tropical country, and in a global warming situation, tropical nations are lot more vulnerable to the adverse consequences of global warming and climate change, and therefore we need to recognize this risk. Fortunately, yes, policymakers have certainly recognized this risk of the adverse consequences of global warming and climate change. We are seeing aberrations in the temporal and spatial distribution of monsoon. Although all the weather forecasters in April and May talk about above normal rainfall, but we still seen this year as an immediate evidence of very poor distribution of rainfall. Take another example, and I think this is important. Indian wheat is at the limit of heat tolerance. If in Jan and Feb mean day temperatures were to rise by 1.5 or 2 degrees Celsius in our grain basket or bread basket of say Punjab, Haryana and UP, our wheat yields will be down by 20 to 25%. That's a big risk. Therefore, we need to address this risk. Our maize is also at the limit of heat tolerance. Therefore, my belief is that we need to invest heavily in researching heat tolerant, drought tolerant varieties of particularly those crops which are at the limit of heat tolerance. But it's a long process. You can't develop a new seed overnight. It'll take 7, 8, 10 years. So we need to start working from now.
So now we have the Kharif monsoon ending up. I would rather not say Kharif is ending up, because we are still having rains. I do not know what sort of an impact that it will have on the harvest and things like that. But India's Kharif production, surprisingly, is estimated to be another boom in terms of the 150 million tons that is expected of food grains actually. So food grains is one part of the picture. The other part of the picture is about cotton, sugarcane, and oil seeds and things like that. Where do you see these numbers running out to be, and what will be its impact on the prices and the market situation?
I also saw the Agriculture Ministry's first advance estimate of Kharif crop production 2021-22. It has said 150 million tons of food grains, of which rice is about 107 million tons according to the government, which is slightly above last year's production level. But your nutri cereals or millets and coarse grains as they call, is 2 million tons lower at about 34 million tons. Pulses, the government numbers are higher, 9.45 million tons for this year versus 8.69 million tons of last year. But I must mention, with great respect to policymakers, the Government of India, Agriculture Ministry, and everyone else involved, I want to mention that the government numbers, in my opinion, are somewhat overstated. My own estimate of many crops are actually lower, because I track the planted acreage, I track input availability, I track the distribution of rainfall, and I talk to a large number of people, including farmer producer companies, etc. And therefore, my own sense is that coarse grain production is slightly lower than the government estimate. That my estimate is lower. Pulses production is certainly far lower, at least 10 lakh tons lower. My estimate is lower than the government estimate, etc. And we must remember that the Government of India comes up with 4 estimates during the year. So this is the first estimate for 21-22. And that we've seen in recent years, gradually, the second and third and fourth estimate, they bring the production estimates down. Take, for example, pulses. Last year's pulses production number for 2020, Kharif 2020, started with 9.3 million tons. And then after people like me have written and spoken about it and given the correct picture, then it was estimated down to something like 8.7 million tons. But this happens in a country we need a lot more scientific techniques to estimate our production, but we need to fine tune all the systems that are in place. Yeah.
As you rightly said, sir, that pulse production is likely to be marginally lower, and so pulse is a large group of commodities. So you have Bengal gram, you have moong, you have arhar. So where do you see the impact is likely to be? Which crop is likely to be impacted, and will this have an impact on the overall? Because pulse, end of the day, is all about protein supply, actually. So people will be able to alternate one for another and things like that. Yet, will it have an impact on the prices? And which are the pulses we need to watch out for in terms of prices and the supply demand situation?
I agree. The government's estimate for 2021 Kharif pulses production is 9.45 million tons. There are 3 major pulse crops in the Kharif season. One is tur arhar, which is also called pigeon pea. The second one is urad, which is called black matwe. And the third one is moong, which we also call it as green gram. These are 3 major pulses of the Kharif season. We also produce some minor pulses like cowpea, for example, and what we call horse gram. In Hindi, it's called kulti. Those are minor pulses. But my estimate of pulses production in Kharif 2021 is at least 1 million tons lower than the government estimate. I would put it between 8.2 and 8.5 million tons of production. My estimate of pigeon pea is slightly lower than the government estimate. I'm expecting pigeon pea availability to become tighter and tighter. In case of moong, there is a very peculiar issue. We have some real top class moong production, and we also have substandard moong production, and therefore prices, there's a big difference in prices, big variation. The top quality sells at a premium, and the substandard quality sells at a discount that is even below the minimum support price. Or we are facing a very peculiar situation. But the big picture is we need to track pigeon pea prices. We also need to look at the planting of the Rabi season, which is obviously the big crop is chickpea or chana, and of course lentil. Now the government of India has allowed free import of pigeon pea, of black matwe and moong till October. They have also allowed import of lentil I think until December, and from newer sources like Russia. Therefore, the government is cognizant of the fact that a kind of tightness can emerge in the availability of pulses, and therefore they want to forestall a sharp increase in price. And therefore, I do appreciate that the government has taken on board ground realities and taken action to augment supplies through import.
As you had rightly said, sir, pulses is an internationally linked crop, and we can augment the prices through our import policy and things like that. Actually, and one of the crops which we are internationally linked is sugar.
Yes, of course.
Sugar is, so we produce a lot of sugar and we export also a lot of sugar, because if the global market prices situation is slightly, tighter, if we have surplus of sugar, we do have a freedom to export it. Actually. So, in the last 1 or 2 years, I've been seeing we've been producing a lot of sugar. We're not converting them into ethanol, and so that's leading to a higher sugar, stocks at one hand, actually. So finally, to say that, like, this year again, the estimate is saying that it's going to be 15 to 16% higher in terms of sugarcane production, actually. So, will the global market situation pan out to be the same as it was in the last year, supporting our sugar exports? And at the same time, you also know that the sugar exports are backed by a little bit of financial subsidy as well. So, will the financial subsidy be a burden going forward for sugar exports, because we are producing more of sugar and we need to export it? Or we have a strong ethanol policy which is coming up and which might have an impact on the sugar availability and the sugar prices?
Yes, I think this is a very, very interesting question, and I'm happy you raised it. But with your permission, I'm going to be brutally frank. Okay. Number one, this year, 21-22, sugarcane acreage has reached a record 5.4 million hectares. And sugarcane production has reached 419 million tons. This 419 million tons is going to give us something like close to 32 million tons of sugar. Okay, it is a great achievement. There's no doubt at all in terms of acreage and in terms of cane output. It is a record. There is no doubt at all. But this record is coming at a great cost to the economy, in my opinion. Now, if you look at the performance of the sugar sector last 3 or 4 years, I think we have been, by and large, barring 1 year, we have consistently produced excessive quantities of sugar, more than 30 million tons, while our demand has got stuck between 25 and 26 million tons consumption, domestic consumption. Therefore, we are carrying huge stocks. Sugar prices are depressed, and therefore we are forced to export sugar. And sugar market globally was certainly not friendly. Not export friendly until last year. It turned export friendly since the beginning of this year for various reasons, including issues faced by the world's largest producer, Brazil, as a result of which sugar prices have gone from 12 to 13 cents a pound to currently close to 20 cents a pound. And then the elevated prices of crude oil also created greater motivation for diversion for ethanol, for blending with gasoline, and therefore all that created tight supplies. Fortunately, we had a lot of sugar, and therefore we exported sugar, but that sugar export is with a subsidy, and therefore my worry, and I've commented on this before, is that I think we need to more strictly regulate our cane acreage and sugar production. We have to produce more. We should produce 2-3 million tons of sugar beyond our domestic consumption requirement. We also will probably need some buffer stock. But sugar export, in my opinion, need not be our priority. Even today, it is not a priority. We are actually forced to export sugar because we are carrying huge inventory burden. And therefore, we need to regulate the sugar sector, because after all, cane is a water guzzler, and all of us know so clearly that there is a looming water shortage in our country, and therefore we need to slowly move away from water guzzling crops to more water friendly crops. And I'm sure sugar acreage can certainly be brought below 5 million hectares. And in fact, I commented on this a few months ago and said that 400 to 500,000 hectares of sugar cane land can be used for some other crop in shortage, and therefore that will save a lot of water. It will also prevent excessive production of sugar cane and its consequential issues for farmers, for sugar producers, etc., etc. And therefore, I think that needs a stronger regulation. We don't have to be. I don't think we need to crow about the fact that we have produced 31 or 32 million tons of sugar. I think we need to pare it down to probably less than 30 million tons.
Thank you, sir. Thank you for taking us through the global situation, the production, the supply, distribution, where are the pain points, and what's likely to be the situation in terms of the key crops and things like that. Thank you very much for your